All right, third takes the charm. Third takes the charm. I think I got it this time. All right, what's up, guys? So it's me, Mac. I'm back here with another video. This one's kind of different from some of the stuff that I've been trying with, but I'm trying to figure out my YouTube, see what it's going to be about, and we're gonna talk about a lot of stuff. And so I figure I'd talk about stuff that I'm passionate about. So today I'm gonna talk about investing because I think it's hella important, especially for people like us. And many of you don't even know, so I don't even know what you're saying, people like us. But I'm an international student here in Canada, so I think this is especially important for people who are immigrants, trying to get their handle in a new country, who have just started earning money in a new country, and maybe they didn't get the education that they need to make use of the money that they make in this new country. So without further ado, let's get started on some investment. So you should know that there's many investment vehicles. It does not have to be the stock market, which is the one everybody talks about. You probably heard a lot about that recently, especially with things like Tesla going off. But you can invest in pretty much anything. You can invest in your friends. You can invest in yourself, which is a huge way to invest. You can invest in the stock market, which is something that we'll touch on today. And you can invest in things like real estate and whatnot. And have rental properties and have them bring you in money. The whole point is that investment is putting money away so that it brings you more money later on. All of these different types of vehicles, however, they have like different levels of returns, risk, and the amount of effort that you're gonna need to put into the investment in order to see like any success or whatever. And they all fall in a like the effort level kind of falls on a spectrum. So some investors are considered active investors. So people who are day traders, which we'll talk about a little bit there. So it's people who are like going in, they maybe buy a stock the same day, and then they'll sell it the same day for a bit of a profit. That's like a really active investor. Like this is probably what they do for a job. Then there's like investing where it's more passive, like when you're a landlord, it's slightly more passive. You own a property, you may be involved here and there in repair or whatever, but for the most part it just kind of gains value over time. Then there's like the most passive is like index investing, for example. You could just like invest in the market and then just follow the trend of the market, never touch it, just always put more money in and basically never touch it. And so that's like probably the least effort required, and it's a really passive way. So we'll talk about some of these stuff. For international students though, I'd say the most important thing to get a handle on is stock investing, and that's the thing that I'm going to talk about today, because some of these other ones become a little bit more inaccessible and take more time to develop, especially real estate. And of course, investing in yourself. I feel like that's another major key. So we'll touch on both of those things. Investing in yourself is a shorter topic, so I'll start with that. The most important thing that you could do with your cash as an international student is to get more and more skills so that you become more and more valuable on the market. If you can start your own business and you've got the skills like that, that's even better, because then you can really start to watch your time turn into more and more money. And if you have a business, investing some of the money that you're making from that business, be it extra or whatever it may be, could really just turn into another form of income for you in time. So it's even more important for someone like that, especially if you're taking some risks to do it. There's tons of programs out there. I've recently been using Skillshare. I think that's a super awesome way for you to invest in yourself. But Skillshare, maybe they don't have a threshold of quality, or I never heard that, but if you can comb through, you'll usually find a good course. Learn something, research the market, see what people need, and invest in yourself to learn that skill, and then offer that service to people, and you'll be surprised at what you make in the market out there. But stock investing is probably the one that most people came in here to get a handle on or to talk about. It's one of the most accessible ways for anybody to start investing and to start to see some return on the money that they're making. You can take matters into your own hands, or you can go with something like a mutual fund. I don't really recommend a mutual fund. They start to take a percent of everything that you do or everything that you make of your profits. Whenever somebody is taking small percentages like that and it looks too good to be true, it's because it is too good to be true. They're definitely making a ton of money. Like if the market is going to make like 8% and they take 1%, over time you're missing out on a lot of your own money and your own profits. So I recommend that you take the 2 hours, 3 hours that it takes to figure out how to do your own self-directed investing, and to go through that. So I'll chat through the process of how you can figure that out and how to do the steps. So step one is to find a broker. Your bank can be a broker. So with CIBC. I just so happen to be with them. I think they have a brokerage. I actually use a different brokerage, but that's an option for you. Like RBC, I know has their own brokerage. Whatever it may be, even if you're in the States, I'm sure your bank has its own brokerage. But a lot of people choose, and this is what I've chosen too, is to use a third party. So I have one bank that'll handle like my checking, my banking, my checking and my savings. But I have a Questrade account, which is my favorite broker here in Canada, which has my TFSA, which is one of the saving accounts that you can open here in Canada. I guess it's equivalent kind of to the 401k in the United States. And it allows you to contribute so much money per year. There's a cap on that, but when you're just getting started, don't worry about the cap. You probably won't reach it unless you're absolutely killing it. And if you do have to worry about the threshold level, then this video is probably too beginner level for you anyways. So yeah, I really don't recommend that you go with mutual funds. I recommend that you find your own broker, and I personally recommend Questrade because I find it was really easy. There is a threshold with Questrade. I think they want $1,000 in your TFSA before you can start trading and stuff. But honestly, saving up that first $1,000 was really good practice for just instilling the mindset that you need. You always want to pay yourself first. Any paycheck that you get, before you pay any debts, before you pay for food, before you do whatever, I always take care of my future self first. I don't even see the money now. The check comes into the account. I take out 10% pre-tax, so I just calculated what I'm making. I calculate what 10% of that was before they tax it, and then that's the amount that's just recurringly taken out, and then you send it directly to Questrade using a bill payment, like a bill payee. I'm sure you guys are familiar with that. If not, just do a quick Google search or talk to a bank teller. They'll tell you exactly how to do it. You can set it up online so that you can just like constantly fund this TFSA account that is over at Questrade. So now you have some money over at Questrade. What do you do with this money? Where do you invest it first? So my initial advice would be to just invest in index funds, because it's the simplest way to get some money into action and to also mitigate the risk. So there in Canada, there's an index fund called the VFV.TO, which is it's like an S&P 500 tracer. So basically, S&P 500 is an index stock in the United States that tracks the top 500 companies that are in the States. The Fortune 500, you may have heard them being called. Tesla actually recently has just reached eligibility to get into there, so the S&P is about to get a big boost if Tesla is allowed to be part of the S&P 500. But in any case, it's good to follow that because it follows the American market, which tends to do really well. And the NYSE is the biggest stock exchange in the planet. It's got the biggest market cap. You're going to see the most gains if you invest in the US stock exchange. It's just the way that it is, so I recommend that you start there. Yeah, so the S&P 500 allows for lots of growth in short periods of times. Of course, it's like really volatile to American news and markets, so you may find yourself paying more attention to American politics if you do this. But it's not a bad thing to know what's going on in the world. I mean, the States does lead a lot of things, so it's worth knowing. It's kind of crazy, but it's worth knowing. And what's nuts is the States tends to just be weird, man. Like Corona is going on right now, but the S&P 500 is already rallying. It had a really low point in March something. It's now. So in Canada, you may be wondering, like, how do you get into the S&P 500 when you're in Canada? Actually, maybe you're not wondering that. Maybe you thought you could buy it a certain way, but you can't. You would need to change that CAD into USD in order to buy it straight up. Like if you're gonna buy an index that's in the States, but the Canadian index that traces the S&P 500 is called VFV.TO, and that's the one that I religiously invest in. Time after time, like every week I'll put in a little bit in there, and then I'll also invest in some individual stocks myself. So how would you pick some individual stocks yourself? This is probably the hardest part of all of investing. Maybe it's like figuring out what you're going to pick. But a long time ago I read this book called The Intelligent Investor, and that's the Warren Buffett basic manual of investing. It's not written by him, it's written by somebody else, but he reads that, and he studied under the professor who wrote it. I forget his name now, which is just brilliant. I'll put it up. But anyways, so in that, he really recommends that you invest in what you know. So anything that you really enjoy, invest in. So like as an anecdote, I bought an iPad a while back, and I figured, I'm gonna like this thing. I might as well, like, I like the company. I think it's going places. I think it's gonna be around for a long time, so I might as well invest in them as well. So you ever hear the adage, if you can't buy it twice, you can't afford it? It's a similar thing. So when I went to buy the iPad, I spent the same amount of money in Apple stock. And between then and now, I've basically been able to cover all of the expenses for any accessories that are needed, and then some. Like, there's still returns that I could put into something else, and it would still be kind of breaking even because just the stock itself is going up. But now Apple, I'm pretty sure, is a dividend stock, so they pay cash out, small amounts, but it's passive income. They pay out cash because they're doing so well. Like, they reward their investors whenever they're doing really, really well. Dividend investing is like a whole other thing that we could get into. Maybe I'll do that in a different video because this one's getting kind of long. But if you're getting started, I'd highly recommend step 1, you open a brokerage account, Questrade. Step 2, you save the $1,000 that it's going to allow you to actually start investing. Step 3, start researching the market, start to understand the trends of it. It's a cyclical thing. Watch it a little bit. I wouldn't say invest right away, but start to do some research for yourself. Step 3 or 4, I can't remember what we're on now, but if it's step 3, then you will then invest in index funds because they trace the market. The market tends to do well and is better than your money just sitting there. And after you start investing in index funds, then you can graduate to individual stocks. Individual stocks, you can start picking them by looking at the stuff that you enjoy yourself, things that you believe in, companies that you think will last a long time, maybe even places that you shop yourself, and then you invest a little bit in my maximum 5 size. Look, this video is about stop. Then you invest in that, invest in those companies, and see what happens, and hopefully you gain out on top. Now I can talk a little bit more about more of this stuff, but I figure that's a good beginning. We'll dive deeper into each of those steps if needed, or each of those individual topics that I brought up if needed. But I think this is a pretty good start for you guys. Once you take these first few steps, you're already well on your way into the investment life, and making sure that you are putting money away for the future, making sure that you're going to be taking care of yourself and taking care of your family when the time comes, and things like Corona won't seem so scary when you have a little backup plan, shall we say. Anyways, guys, hopefully you found that useful. I'm hoping to talk more about some of these topics. Subscribe if you think this stuff is going to be useful to you. If you think you learned something here today, please hit the like button. Of course, that helps. As you can see by my subscriber count, this is brand new to me, so I'm just learning how to do all this stuff. Investment, I'm really passionate about that, so anything that you guys want to talk about or you want me to dive deeper into, just drop in the comments, and I'll probably make a whole video about it, man. I have no problems doing that. I love talking about this stuff. Anyways, hopefully that was useful for you, and I'll see you in the next video. Peace.